Hey folks, how you doing? Good evening. Let's do a trade review for today. It's a little bit later today because I traded longer than usual and I wasn't able to do my trade review earlier today. So I'm going to go over it. I had a crazy trading day and a lot of mistakes in regards to risk management, not being super strict on my risk management. And yeah, so I mean, look, trading, the name of the game is staying in the game, literally. And I've heard Sang Lucci say this a number of times. It's literally just about staying alive, okay? And if I keep trading like this, I'm not gonna stay alive, all right? So definitely it's very important to realize that. And yeah, so I had a total of 4 trades today, 4 losers, and 3 of those were long option trades. One of them was a credit spread trade. All right, so let's go over that right now. I've got my trading summary right here for you, so you can take a look at all of that if you want. And I traded options expiring the next day, which is April 9th. Today is April 8th. Tomorrow is April 9th. So all the long options I purchased and sold were all expiring tomorrow, and the credit spread trade was in fact expiring today. All right. So let's go over that right now. I put in a whole bunch of markers here on this chart to show you where exactly I entered, and I just put in a buy or a sell. So I want you to assume that if it's a long, it means I either sold puts or bought calls, and if it's a short, I either bought puts or sold calls. All right, so let's get into it right away here. So first thing, so yes, basically going into this morning, we were in an hourly downtrend because SPY confirmed that hourly lower high and lower low yesterday. So we were expecting some kind of lower high to form. So the reason I was shorting into this up here was generally because I was expecting a lower high to form. All right, so I just want to let you know about that. So let's go here, 2-minute chart, and let's see exactly what I did. So the first move was in fact up, down, up again. Let's see here, down, and then up. Now on the next bar, I went long right here, anticipating that this was going to be it and we were going to see some upside from here. So I purchased the 280 calls at 940, all right? And my stop was going to be below the low of the day. So what happened was we chopped around and then I stopped out right there on the next bar, okay? So at this point now, the SPY is breaking the low of the day and a lot of names are pretty bearish. So we're chopping around here. Now the next trade was put on at 957. I bought the 255 puts right there on that trade. Now I held on to them for a while until we see this first green candle right here, which is where I took a partial profit off of that trade. In hindsight, I should have taken off the entire trade. Now, when SPY made a higher high here is when I should have started to get worried. But instead, I didn't, and I added to the trade right there. So what happened was SPY just kept moving higher. And you can see the buyers just came in strong there. So really what I did was I shorted right here at 957 by buying puts. And then we saw another leg down, a pretty strong move down. And then we saw 2 inside bars followed by the bulls coming in to buy this dip right here, okay? And in regards to the trend, we were in fact testing the second higher low of the 5-minute trend that had occurred, okay? So we had lost this higher low, but this was the next higher low we were testing around 265.50. That's what we were testing. And once the bulls hit that level, well, there was no looking back, but we couldn't have known that. Generally, I covered half my position there, but I wasn't intending to get out of the entire put position. I was thinking about holding some. So what happened was, that's it. And I didn't cut it when it went back to my break even. Instead, I added onto it when we got up here. I was going to anticipate that this was going to be a lower high and then we were going to just chop around in a tightening range. But once we broke up to a higher high here, the most likely scenario changed, in fact, and now it's shifting favor to the bulls. So I added there to the put position and then I covered the rest right here at 1030. All right, so I got out of those 255 puts for a loss at 1030. So up until this point, I had 2 losers on the day, both of them long option trades, okay? So we had the calls here, I stopped out, and then the puts here, I took some profit, I added to it, and then I stopped out when it broke higher. So not great trades overall, okay? Definitely it would have been better to hedge against those puts by selling some puts. versus that low. But see, that's why this is so tricky. And I made it a point to myself right here. Obviously, I wasn't being strict on my risk management because after these two trades here, I was down $60 in the account, which the dollar amount doesn't matter, but it's the percent that matters. And in fact, it wasn't in line with my risk management. That's the most important thing, all right? So yeah, not being strict enough with my risk management and not being able to view market information as purely objective, not being able to clearly identify what is the most likely scenario in the market. And that's harder than it seems to do, right? It's hard to just look at a chart and say, what is the most likely scenario to happen right now, okay? Is it going to be a lower high? Is it going to be a tightening range? Whatever you see, okay? So down here, the most likely scenario was not to break to a higher high, but it was in fact a lower high. But when we broke above here and saw continued buying around the moving average, that was a signal. That was a signal for me to say, okay, there's still some buyers here coming in at the moving average. So that's a bit of a red flag. So definitely a note to myself for this video is going to be to watch buyers and sellers, watch the tape when we get to crucial price areas like dynamic support and resistance, aka the moving average. When you get to the EMA on the 2-minute chart or the 5-minute chart, you want to be watching that tape to show if there's continued buying or continued selling. And that's the trick really, that I'm not being able to do it consistently, okay? So the market moved higher after that. Let's take a look here. So we came up for a higher low right to the moving average. Classic move. I've seen this move happen a million times. You see, we're in an uptrend now. We pull back right to the moving average, bullish engulfing right at the moving average, and then it's all bulls. Again, another time, bulls are in control. Now SPY broke above the high of the day, which was 269 at that point. Now let's see how it responded. You can see it was just continued buying for the majority part of the day. Now when we saw this, I started to say that SPY was looking a little bit toppy. You can see how extended we were here, and based on the fact of the hourly time frame, we were in fact looking for a lower high. So I decided to initiate a short position here and get long some more puts. So I got long the 258 puts. I paid $47 for 2 contracts at that point at 11.28. All right. Now, this was one of the hardest positions I've ever been in because I said to myself I was going to stop out at 271. I did not stop out when SPY hit 271. Instead, I was watching what was happening. All right. And me watching what was happening, you can see how we broke to a higher high there above 271. We chopped around at 271.50 for a while. And then take a look at how the price reacted. We broke below that. We got some follow through close to this moving average area, a second leg down right to the moving average. So we're seeing sort of this stair-stepping pattern down. This is the area where we're starting to see a little bit of profit taking for bulls who profited from this run. It makes sense, okay? Once I saw this pattern occurring, I said, okay, I've seen this pattern before in the SPY where once we hit a top and we just start stair-stepping our way down, and it happened a few times where we literally just stair-step down and give away all the gains of the previous trading. Anyhow, I initiate another short position here at 12.08, and I actually sold some out of the money call options expiring the same day here. I sold the 273 and bought the 275. So a 2-point wide credit spread, and I collected $45 for that. At that point, I added to my put position. So I'm positioned short in the market right now, okay? So I'm anticipating a move down. Now keep in mind, we are going into lunchtime, so the odds of a greater drop are considerably lower simply because we're in lunchtime and there's less liquidity. So let's look at what happens here. And you can see that SPY moved higher once. This was the high of the day, 271.72. We moved higher drastically to squeeze out shorts. Now, I clearly have a very hard head because I did not exit any short positions at this point, okay? Because I try not to exit on drastic moves in either direction, and that's maybe not a good habit to have. So you look at how this rally got sold into. A second time, and then boom, 2 rallies got sold right into, right at that 272 area. So a lot of traders were taking that short. There was a strong resistance at that level. So once I saw this form, that kept me confident to stay in the short trade, okay? And the more chop. So this is the chop that's killing the premium. Now I don't mind because I'm short the calls, but I'm also long the puts at the same time. So big drop down at that point. Now at this point, the Qs lost their 5-minute uptrend. The financial sector uptrend was also in danger. So look at what SPY did. We dropped down here to this 270.50 area. We got an inside bar, dropped a second time, chop, 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 big drop down to 270. Now look at how a price reacted at 270. We got a huge drop right down to 270.05, and then the buyers started coming in again right there. So they defended this support, this 5-minute high or low here. And this, at this point in the trading day, I was expecting a drop. I wanted it to drop another point. Obviously, it doesn't matter what I wanted it to do. I needed to be more aware of the institutional order flow and how strong these buyers were at 270 here. These buyers were damn strong, okay? And you can see that after that thing, look, they just shot this thing way back up and broke the high of the day, and I got out of the trade. Once I saw this right here, boom, I was out of that. I'm not playing around anymore. Broke the high of the day, and my puts were worth nearly nothing. One thing I want to note to you is that I entered these SPY puts here and then here. My average price was around $45. Now, I was not even back to my break even on any of this. Even at the lowest point of this drop here, these contracts were barely trading at $40, okay? So it just goes to show you the power of premium decay, especially during choppy market conditions like this. All right, so these puts that I was long just got killed, absolutely killed. The calls, my broker liquidated the call position because my account is too small to have in the money calls 1 hour to expiration. Okay, so they liquidated that position for me for a loss. So that was 4 losers on the day, guys. Just to take a look at what happened after. Well, after that, it doesn't really matter. I was out of it. And look at that. That's just pure madness in the last hour of trading. So once it squeezed above here, we saw a lot of this broadening type of range. Now you can expect sort of drastic price moves like that in the last hour of trading. But generally, I think I said most of the most important things, which was the buyers around 270 that were so strong. And down here as well, when I stayed long the put and I didn't cut it when it got back to my break even, I let it go because I was curious and I wanted to see how the market was going at that point. But what I wasn't aware of enough is that I needed to pay more close attention to how the buyers and sellers were interacting around the moving average area. And this is something I definitely need to incorporate into my trading more. And guys, you learn more from your losers than from your winners. Okay, let's be honest here. Yesterday I had 1 winning trade. It was a fantastic trade. Today I had 4 losers, and look how long the video is getting. So you see what I'm going at here, guys? So definitely want to be watching the tape at key price areas, at dynamic support and resistance, all right? This 272 area, once we saw this 272 getting rejected twice, that was a great area for a short, right? You got 2 times attempt to do it, and we got 2 legs down at that point. You see this chop, tried again here, 272, failed, and we got to move all the way down to 270. But once we hit 270, it was all bulls. There was nobody left to come and sell down there. The bulls defended it aggressively and just got this price way back up. I just need to view market as more objective. I need to view the market information more objectively, and that is one of the hardest things to do. Being able to look at the price chart from an unbiased perspective, look at the tape from an unbiased perspective and say, who's stronger, the bulls or the bears? I will position myself where I think the side has a more likely chance of success. That's it. You cannot include your own ideas into trading. You cannot include your own personal ideas. You cannot start building a bias, building a thesis based on what you think the market's going to do. That is a losing strategy, 100%, guys. Look at the tape and trade with the institutions. Trade with their flow. You got to decipher the mysteries. All right, guys. I've had enough. Take care, okay? Tomorrow is the last trading day of the week. Friday, the markets are closed. It's Good Friday. So I'm going to try and sell some premium and collect some US dollar cash in my account, because right now my USD balance is negative $3. So yeah, we'll that's it, okay? So I'll show you actually. So I'm at my P&L, just the P&L. Here we go, minus 21%. Talk about bad risk management. Yes. So I did not have good risk management today. Guys, I'm trading a small account, $1,000 account, but 20% in a day is just not justifiable, okay? So that's why we need to keep on making trade reviews and keep grinding away at this every day in smart trading decisions. Manage your risk, all right? Right here on top here, I have a slide, and I'll post it in the description below. It's called How to Avoid Self-Destruction in Trading. This is one of my guidelines. So number 1, am I at risk of losing control of myself? If I am, I stop, okay? Number 2 rule is if I have 3 losing trades, I stop for the day. I had 4 losing trades, but 2 of them were on at the same time. Number 3 is I will avoid trading aggressively counter the trend. That's a tricky one too, because it requires you to view market information as objective and not develop biases, right? All right, then 4 and 5, I will always place a break-even trailing stop on a winning trade. So once you have profits, you got to get out if it goes back to your break-even. And today I didn't do that, especially on that second put trade. My fill wasn't the best fill, okay? When it went back to my break-even, I didn't cut it. I should have cut it, even if I had a bad fill, okay? And number 5, which is one of the most important ones here, I have it as focus on hitting the ball consistently instead of how far you can hit it. So this is just relating to not always aiming for those home run trades and just kind of trying to hit that ball consistently on a regular basis, you see? All right, guys, so that's my insight for today. I wish you all the best. And if you had similar trading experiences today, I'm sure a lot of people had a hard day today. It was just a crazy day. Anyhow, so I wish you all a great evening. Take care. Bye.